Hi everyone, thank you all for being here. We have an exciting presentation today about blockchain and cryptos. So I'll pass it off to Dr. Jiang to get started.
Hi everyone, my name is Danling Jiang, and thank you for coming to the presentation. So here is our talk today, and I do have a schedule. And before that, I want to do some advertisement for our center and our lab, club and our lab. Okay, so I'm the co-director of the Blockchain Business Lab. This is a lab led by faculty in the College of Business, working with students and industry partners to explore research and business applications of the technology in blockchain space. We also have a Center of Entrepreneurial Finance, which hosts the Blockchain Business Lab. I'm the co-director of the center, and we work with student faculty teams and help entrepreneurs to manage their finances and their early stage projects. If you're interested in joining the research projects as a research volunteer, and you can sign up on our website. I'm going to post the website link on the chat box later on. Lastly, I myself have founded a community-based network called the Stony Finance Lab.org. And here we share a lot of information and resources on events and career opportunities related to finance, investing, blockchain, startups, small businesses. And then we have a free newsletter to share all sorts of information and events. And feel free to go to the website and sign up for the free newsletter. If you have registered, we may use your email to send you the initial letter. If you are not interested, you can always unsubscribe. Everything is free on the website. In particular, we have a section on blockchain and crypto, and we work together, create a crash course. Basically, it's a one-page ratings for blockchain and crypto beginners to learn about the space. And our website also have all sorts of information about blockchain. It's changing almost weekly or daily because the space is changing very rapidly. Right. So today's roadmap, we're going to start with a little survey of blockchain experiences, just to get to know where are our audience at in different stages of the space. Then I'm going to do a presentation to lay out the basics for blockchain and crypto, which is about 20 minutes. Then followed by Evan Kim, who is an undergraduate student at AMS, also an analyst at Dune Analytics, and he's going to talk about DeFi and NFT. Lastly, we are having Dr. Aaron Kim, Associate Professor of Finance, also the co-director of the Trading and the Investing Lab in the College of Business. He's going to talk about the various research he's been doing with students in his lab. So let's start with the survey of the blockchain experiences. So I'm gonna launch a few questions, and you should be able to see the questions on your screen. And our question asks you about your experiences with Bitcoin, Ethereum, DeFi, and NFT. So go ahead, click yes or no, or you have no idea, and then we can get a sense of where the audience is in terms of their exposure to the space. So here we go. Question 1, question 2, and 3 and 4, right? Did everybody enter your answers? Okay, so let's go over. Can I stop the poll, or do you need more time? Okay, looks like we had most people. Okay, so I'm gonna end the poll. Just let you know the results, and you should be able to see the results on your screen. So we have first question, have you purchased or traded any Bitcoin? We had about 70% of students saying no, and 30% people saying yes, so 1/3, right? So how about purchasing or traded any Ethereum? We have about a quarter, 23% said yes, 77% said no. For experiences with DeFi, decentralized finance, yes is 0. By the way, we have no people here use the DeFi, but we have 92% says no, 8% have no idea. And the last question, have you minted, purchased, or traded any non-fungible token, NFT? We have 8% people saying yes, great, and 92% saying no. Okay, so that's where we are in terms of the exposure to the space. It looks like our talk is not redundant because most of you don't have much experiences in this space. So I'm gonna start with the basics, right? What is blockchain? What is cryptocurrency? And with a focus on Bitcoin, then Evan's gonna take it over from there, right? So blockchain is basically a decentralized distributed ledger. It's a new technology that gives a security to a network that allows peer-to-peer transaction. So one of the biggest and the first application of blockchain technology is cryptocurrency, and also which leads to decentralized autonomous organization, right? That's the new form of organization or enterprise now and in the future, right? So I'm going to give you a little bit more details, right? So currently our legacy system is the graph on the left. So for most of the services and transaction we do in the real world, we have a third party which serves as the central point, maintaining our ledger or transaction history. So everybody has to interact with the third party. But with the blockchain technology, we don't have a third party, which is the intermediary. Instead, everybody is connected to everyone else, and there is no single point of failure. And this technology is blockchain, and the blockchains are blocks of record, transaction records are linked by the hash, right? And also, how does that work, right? So blockchain technology allows peer-to-peer transaction. It can be varied by the network, and the blocks will be added to public ledger when it's created, and every block will be linked to the previous block. Any alteration to any record is going to change the connection between the block, which will not be verified by the entire network. So basically, we, instead of having one copy of transaction history, we have thousands, hundreds and thousands of copies. So it's very difficult to hack the system because it's nearly impossible to change thousands of independent copies of the transaction history at the same time, right? So the history of the ledger is public knowledge. Anyone who can run a full node of the blockchain history will be able to see every transaction under the addresses. And in the past, especially for Bitcoin blockchain, it uses the proof of work, right? So you need to show any so-called miner who builds the block, record the transaction history. They need to show computational cost that they have invested in this endeavor in order to produce the block. But nowadays, more and more new blockchain have used the proof of stake technology, which gives priority to miners or participants if they hold more tokens, right? So those are the details of the technology. But now I want to move to Bitcoin because Bitcoin is the first application of the blockchain technology, which is created by Satoshi Nakamoto in 2008. Bitcoin is now emerging as the new and global private monetary network. And in addition to Bitcoin, we now have thousands of cryptocurrency. Also, we now have a lot of NFT and other applications of blockchain technology has been developed and explored. One of the biggest one, which is something we're going to talk about today, is the smart contract future, and such as decentralized finance and such as Ethereum blockchain, which allows the coding of smart contract. Of course, we can also use blockchain technology in other domains such as supply, transportation, order flows of products and streamlining financial transaction. In the future, we will have tokenization of values, and our house, our property, anything in the world can be put on a blockchain as a verifiable transaction record and ownership record. I got this data 2 days ago, so this is the latest data. So if you go to coinmarketcap.com, which is one of the largest websites for checking out the listing of cryptocurrency, and you will see that different market caps for different cryptocurrency. So right now, the current market capitalization of cryptocurrency is over $2.6 trillion, with Bitcoin accounting for 43% of the market cap. Ethereum takes the second place, accounts for 19% of the market cap, followed by Binance Smart Chain, Binance Token, and those Tether and Cardano, Solana, and Ripple XRP. Right. So the rest of the cryptocurrency accounts for roughly like a quarter of the total market capitalization. So this market is growing, and it's over multi-trillion dollars. So it's not something we can ignore. Okay. In terms of types of cryptocurrency, and Bitcoin can be considered as the cryptocurrency as a store of value. Ripple XRP is more serving as a medium exchange. We also have computational tokens, which allows for smart contract, which includes such as Ethereum, Binance, Cardano, Solana. We also have stable coins that includes USDC, that includes Tether, and some other types, right? But the first three are really the most important ones at this point among cryptocurrencies. Here, I want to spend some time talking about Bitcoin, because I feel like Bitcoin is really important for the beginners to understand. Now, Bitcoin is emerging as a new form of money. And traditionally, in finance economics, what is money, right? So money has a tripartite definitions. It has to satisfy 3 criteria, right? So money has to be a store of value, and money has to have the unit accounts, right? You can divide them into equal size units and use them in transaction. And money has to serve as a medium exchange, right? So in human history, we started with commodity money, such as the shell, the gold and silver. We moved to representative money with the banknote representing the gold and silver behind it. Then we moved to gold standard with currency of every nation pegged to gold. Then we moved to the gold convertibility standard after World War II, and in 1971 in the United States, and the gold convertibility standard was suspended and moved to the fiat money, right? So fiat money has no intrinsic value, but it's backed by the government and used as a medium exchange in the economy, right? But starting from the existence of Bitcoin, and the world has other options, including the private digital currency, which includes Bitcoin and maybe some other cryptocurrency. And starting from last year, in the last 12 months also, we also have another form of digital currency, which is the CBDC, the central bank digital currency. So you can see the innovation pace has been growing rapidly, and every 12 months, and now we have something really new, right? And the reason why Bitcoin came into existence can be dated back to over the last 100 years, even in the United States, the best and the strongest economy in the world. Our currency was one of the stablest in the human history. Still, $1 in 1993 has lost nearly 97% of its purchasing power in the last over 100 years, right? So we used to call millionaire in 1993, then you need $27 million to have the equal purchasing power as a millionaire back 100 years ago, right? So because fiat money allows really unlimited printing. Therefore, your currency, your fiat money can lose money value over time. So it's not a very good store of value over a long period of time. So that's why Bitcoin in part was created, is to provide a new system, which is the private digital monetary network, and hopefully to maintain the store of value. This is because Bitcoin has limited supply, monetary supply. It's money because it has units of count, and we have one Bitcoin. Each one Bitcoin can be divided into 1,000 million Bitcoins, can be divided into 100 millions of Satoshi or sats. And the monetary supply for Bitcoin, based on the code, cannot exceed 21 million Bitcoin. And so far, about 18.8 million Bitcoin has been mined and in circulation, right? So this is the supply curve. This is total circulation. And we're approaching the final really stage of crypto mining. It's going to take decades to mine the last Bitcoin, where you will never be able to mine the last Bitcoin, but the supply is tighter and tighter over time. As a result, because the network is growing and adoption is become wider and more broader over time. So if you look at Bitcoin price, and this is log price, right? Because for network pricing, you want to look at log price. Log price, and you see more linear, but if you look at price, it's more exponential, right? So log price, you can see over the last 12 years, and Bitcoin has been an upward trend, has increased by from 25 cents or something to $60,000 a coin today, right? So if you are not sure that if how this is going to change our world, I want to borrow a language from Eric Townsend's book, and he said, my prediction is that the invention of the distributed ledger and double spend proof digital cash, which is referring to Bitcoin, will eventually change the world in profound ways. And by profound, I mean on the scale of the internet or personal computer. So this could be a revolutionary technology, which it has shown to us in the last 12 months that it can change every aspect of our financial and economic life, right? So I'm running out of time, so I have 5 minutes left. I'm gonna go over some of the other aspects is really related to asset allocation investments, because I'm a finance professor. This is something I focus on when teaching my students, right? So nowadays, a lot of people are buying into the idea that Bitcoin and cryptocurrency are emerging as a new asset class, right? So this kind of asset class, they're replacing the trust in the legacy system in institutions, the third party or the central bank, with the trust in computer algorithm, right? Once you deploy the computer algorithm and your governance structure is in place, nobody, single person can change it, right? No politician can change it, right? So, and there's a lot of opportunity involved in this asset class, because we can exchange value freely and globally with anybody in the world, whoever has a cell phone and connection to the internet, right? So you can protect the wealth, and also the rules are enforced in a reliable way and predictable way. You know what's gonna happen every year, right, based on the code. And the system can verify, has a verifiable integrity, because nobody can go there secretly change anything without the proof by the network. Of course, there's a lot of risk by investing Bitcoin and cryptocurrency, because the regulation is evolving every day, and technology innovation may impose threat on existing innovation. We also have market risk, because cryptocurrency and Bitcoin are very, very volatile. And recently, Bitcoin has experienced a 50% drawdown, right? Which is normal, but for a lot of people, that's devastating, right? And also there, when you invest in this asset class, you could face custodian risk, because you can send your coin anywhere, and if you are hacked and people can take your coin and disappear, and you are not going to get them back, right? In the last 12 months specifically, there's a tremendous growth in popularity and also adoption of Bitcoin and cryptocurrency, in part because of the pandemic, that the central bank has printed money in an unprecedented rate. So our monetary supply has increased by trillions, right? 7 trillions last year. And we printed 25% of the total money supply ever, right, in US dollars. And so there is anticipated, and which actually is now we experience inflation risk that is leading and has led to asset price inflation, right? So Bitcoin surge to some extent is really serving as a hedge against the inflation risk. And we also find that after the pandemic, financial assets become more correlated, including with Bitcoin. And also in the past, many people hold bonds, and bond has reached nearly zero yield and close to zero yield. And over time, when inflation risk goes up and the yield has to go up, so holding bond meaning that you are going to lose money. So there is a strong desire to diversify the cash and the bond holdings with alternatives such as gold and Bitcoin, right? And also nowadays, if you deposit your money in the bank, you got nearly zero interest rate. However, if you deposit your money in stable coin, or you deposit your Bitcoin, your Ethereum in various platforms, you can get a yield that's actually substantial, right? So that's all comes from the innovation from global exchange network, therefore provides alternatives for investors to have diversify their portfolio. So included in the innovation are two emerging and growing applications of blockchain technology. One is the decentralized finance, DeFi, and the other is non-fungible tokens. So I'm gonna let Evan talk about those applications. So here I just wanna do my summary. So my quick presentation shows that blockchain is a revolutionary technology. It's gonna reshape, it has begun reshaping the way we transact value in the world, right? And cryptocurrency, especially Bitcoin, is the first application of blockchain technology. And this space in blockchain has accelerated innovation and growing opportunities such as DeFi, NFT, tokenization of values. And once you hear Evan's presentation, you will see more and more opportunities down the road. Okay, so that's my presentation. I'm gonna stop share here and let Evan take it over by sharing your screen.
All right, great, thanks. A little introduction. My name is Evan Kim. I'm a senior here at Stony Brook, and I am finishing up a double major in math and applied math and statistics. I also work as an analyst at Dune Analytics, and I also do a lot of work on the side working at decentralized autonomous organizations. And so I really have that firsthand experience about what is going on. So, so my talk is going to be about DeFis and NFTs. And so what is DeFi? Hopefully I'll be able to, I guess I'm not surprised that no one has heard or really interacted with DeFi yet, because it isn't really in the main news yet. But basically, decentralized finance is it's a system where financial products that have normally been offered by banks, by investing institutions, are now available to anybody who has connection to the internet. You no longer need a bank account to access these kinds of financial products. And so that's huge in different parts of the world where a lot of people are traditionally barred from utilizing the financial system because they have such a difficult time obtaining a bank account to participate in the first place. And so the barrier to entry is very, very low. And it's a global system. So, you'll be interacting with anybody all over the world. So a lot of the emerging countries in Africa, in Southeast Asia, where their currency is not a currency that is very stable, they can use DeFi products and cryptocurrencies to offer some stability, a hedge against their own currencies, and be able to build wealth in a more sustainable way. Because DeFi is technologically superior to the traditional finance system, just because of all of the new technology that is introduced there, the result is lower fees, higher interest rates, higher returns on your money, increased transparency because everything is on a distributed ledger, and also that gives more security as well, and also that it's just faster too. For example, if you want to send a payment to someone halfway across the world in the traditional finance system, that can take many, many days, assuming you even know how to get started doing that. And of course, there's a high fee of that you need to be able to pay to even broker the transaction in the first place. In DeFi, you could send that kind of a transaction in amounts larger than $25,000 if you need to send large amounts in a matter of seconds. The transaction goes around the world in a matter of seconds and is completed, which I think is really amazing, similar to how the internet allowed the ability for anybody to talk to anybody else in the world. Like before, you had emails and you would send it back and forth. Now we have real-time messaging platforms all over the place where you can just instantly message another person and get a response, all the way around the world. So the concept is the same. And lastly, since DeFi is a new growing industry, there are a lot of high-paying jobs in DeFi. So SushiSwap is an automated market maker. It's a DeFi company, and they are offering a lot of jobs for community managers, marketing, business operations, business development, technical roles, just anything you can really think of. And they pay pretty well, starting at $80,000 a year, which doesn't include a signing bonus. You don't need a college degree. You don't need you don't even need a resume. You don't have to network on LinkedIn. You just need to be interested. You need to have a basic understanding of DeFi so that you can understand how you can contribute value to the DeFi company that you would want to work at. Another point I'd like to make is that in DeFi, compared to the traditional world where money is always an issue, in DeFi, it's the opposite, where there's so much money to go around, but there aren't enough people to have the money go around for. And so money is not an issue in DeFi, and human capital is the biggest issue, and being able to essentially use the money effectively that has accrued in the DeFi space. And here's a kind of a little chart I found that demonstrates the exponential growth of the DeFi industry. The DeFi industry was originally created on the Ethereum network in maybe like late 2018. So it's been less than 3 years. And in the past year alone, it's gone from about $20 billion in total value locked in the system, the size of the industry, to about $250 billion today, nearly a 10x in growth over the past year, which might sound like a lot, but in cryptocurrencies, since everything is exponential growth, it's not unusual to see 10x's here, 100x's here. It's more of a casual thing for people familiar with the industry. And so here's an example, a list of some of the top DeFi protocols. And these are, the way you can think of them is similar to like the largest companies in the S&P 500 or the largest companies on the NASDAQ. But instead of companies, these are DAOs, decentralized autonomous organizations, that also have an algorithmic aspect. And so that's why we call them protocols, because all of these smart contracts that create these DAOs is all done algorithmically via programming, on the all mostly transparent on the blockchain as well. So you know, just looking at some of the values, like these are, you know, billion-dollar companies that, if you think about it, a year ago there might have only been one or two that were, you know, $1 billion companies, and now there's 10. And the rate that they're growing is so fast that it's very similar to like a startup environment, where there's always different things that you can be doing to grow the protocol, to grow the total value locked, to provide more value to the ecosystem. And so the opportunities that exist here are really really limitless, and up to your imagination for where you see you can contribute your unique individuals' skills and talents in crypto. So going over to NFTs, NFTs are an even more recent phenomenon. They've been around since I believe like 2017, and only in the past year, really this year, have they blown up in value. And so a quick intro for an NFT: it's a non-fungible token that is a unique digital asset, digital native asset that you know, it's just a digital asset, and you can use it in what I like to call the metaverse, but really it's just, you can use it on the internet to do other things on the internet with. So an example, a couple examples are the gaming ecosystem Axie Infinity. On the right-hand side, I have a picture of what the gameplay looks like. So here, NFTs are being used as in-game objects to create a gaming ecosystem where people can play the game to earn money to support themselves. And it's really blown up over the past few months. And you know, a lot of people, it's very popular in the Philippines, because people discovered that they can play this game and earn more money playing this game for a few hours a day than they can at a real life job in the Philippines. And so a lot of people have essentially just stopped working in the real world and now just play this game, and they earn more money than they did in the real world with whatever job that they were doing. And it's also been a way for these people, usually lower socioeconomic status, who don't have access to the traditional finance system in the Philippines, to also be onboarded into this global financial infrastructure, where a lot of the people that have, you know, that play Axie Infinity in the Philippines do not actually have any traditional banking assets. They went straight from like under the table money to being paid in cryptocurrency via a wallet in the gaming ecosystem. The other side of NFTs are more of, I guess, like virtual reality, where so the example I have here is this protocol called Decentraland, and there's a picture on the left that kind of shows it. It's a very virtual world. You have an avatar, you can walk around, you can do different things, you can customize you can customize what you wear. You can buy virtual plots of land, where some virtual plots of land are actually more expensive than houses in the USA now. And this is kind of just the beginning of what the metaverse looks like. It's just, you know, everywhere you can use virtual currencies, the cryptocurrencies, and virtual assets, the NFTs, and they start to blend together, where you can essentially live in the metaverse, do things in the metaverse that just really didn't exist before. It's a very new concept, and it's still a very work in progress. And you can see, and as someone who has a front row seat to everything that's happening, even the people that are working on all of these new things don't even know everything that's going on, because there's so much innovation and so many people building cool different things that just, that there's just so much to understand. Not any one person can really stay on top of everything that's going on. So here's some more examples of NFTs. These were taken from a NFT trading platform called Opensea, where you can basically buy, exchange NFTs using your crypto on the cryptocurrency network. So like this is a picture of a CryptoPunk on the left-hand side. I picked these actually, first of all, because they all have a lot of cultural significance in the crypto culture now, and crypto time kind of passes by a lot faster than real time. So even though like this CryptoPunk is only like 4 years old, it has a lot of cultural significance and historical significance too, because a year in crypto is kind of like 5 years in the real world in terms of the speed at which things go and the pace of innovation. And so another one is this picture called Fidenza by digital artist Tyler Hobbs. He has a very interesting story, and his success came, he basically went from not really knowing what he wanted to do to becoming a multimillionaire in a matter of really this year, because Fidenzas came out earlier this year. It's a new kind of NFT that has some, new technological aspects to it, where the picture, the artwork is generated by an algorithm. And this NFT collection blew up. And like, as you can see here, this piece, this Fidenza was bought for 1,000 Ethereum, which in today's prices, Ethereum is about $4,500 for 1 Ethereum. So 4,550. So I believe that's about like $4 million, give or take, in the value that increased at. And so it was, maybe for someone who originally minted it and sold it, that was maybe like 100x or 1,000x profit on your original investment. Another picture here is an Axie Infinity. So earlier on, you guys saw the Axies kind of in a game mode. You can also buy and sell these game assets. Some are better than the others, and so they have varying costs. And it's a marketplace that you can kind of study, and you can see inefficiencies in. And a lot of people make a living by essentially studying key markets and then finding items that are undervalued and buying them and then flipping them for quick profits, because they have the experience, like they know what is going to sell, what the real market value of something is. And then lastly here is a picture from the Bored Apes Yacht Club. This is, at this point, this is another culturally significant item. And I just wanted to show it because it's basically meant to say that you're rich if you own one of these, because how expensive they are. And it's basically kind of a way to show off your crypto wealth, because even though you might be rich in the crypto world, they're all digital assets, and so you still have to transfer them over to the real world. And I guess that's kind of out of the scope of this discussion, but your crypto wealth and your real world wealth are kind of two different things right now, but there's a lot of bridges happening to make them all combined in the future. This is the last slide I have, which is about the trading volume of NFTs on Ethereum. And as we can see here, this little dot here, there was something that everybody in the community called an NFT bubble. We thought the the ecosystem, the NFT industry was in a bubble in January and February when it was, you know, a couple $100 million of trading volume. And little did we know, by the end of the summer, it would become a multi-billion-dollar trading volume marketplace. It really just, as you guys can see here, it really just, I mean, just exploded in value. And also, although it's tapering off, we're still well above $2 billion in trading volume every month for different NFTs. So it opens, this is really kind of, I'm really trying to illustrate the size of this marketplace, how big the NFT scene is. It's really like a virtual art scene. And if you consider how big the real world art scene is, then you can kind of think of the NFT art scene as, you know, smaller than that, but quickly capturing more and more value over time as people start to transition over from the real world artwork to more NFT assets. And so a lot of opportunities exist here, a lot of which we don't even know about because the innovation is happening at such a quick pace where, you know, what you, like, let's say you're a senior and you take next semester to really deep dive more into this, you can't really even expect what you might get as a job for working because the job most likely doesn't even exist yet, even though there would be a demand for that job and there is money to pay for that job. The actual, like, putting the money to the job description to the person, combining that all together is still a big work in progress in the crypto landscape as, you know, infrastructure continues to be built. Like DeFi is less than 3 years old. NFTs are they really became popular earlier this year, so less than a year old. And yeah, this is just the beginning. That's all I really have to say, and I'm going to end my presentation on that note.
Thank you very much, Evan. So let's now move to Dr. Aaron Kim to share a little bit what the kind of research he's doing. So Aaron, you can share your slide and make sure you unmute yourself.
Okay.
So after this, we will open up to Q&A.
Okay, so I do not have enough time to discuss all of my research topic. So let me show you some. So actually, in these days, all of the cryptocurrency markets are crazy. So what we are doing in my research group is to analyze our data based on some statistical or some scientific point of view. So then we have many crazy data. Then how can we analyze this data scientifically? So then first thing we are considering is the risk of our cryptocurrency. So first thing we have to consider that risk management. But there are some traditional risk management methods are developed. So we apply that traditional method to the cryptocurrency. And then, so if it has different, then we can change a little and we make our own method to analyze the risk of cryptocurrency. And second, there are also the traditional way to analyze the portfolio optimization based on the asset. But if we consider that cryptocurrency is another asset or some currency, then how can we find our optimal portfolio based on this crypto market? So that is also our research topic. And then, so in these days, the cryptocurrency also have some derivative market. So then how can we trade this cryptocurrency derivative? And what is the difference between the traditional derivatives and cryptocurrency derivatives? So that is also interesting topic. And so stablecoin also, so stablecoin can be constructed by some technical method. And if we apply some derivatives into this crypto, so stablecoin, then we can find some very stable coin system, which is not moving so frequently. So those kind of things are the research topics we are discussing. And then, let me show you some example. So then here, so here is so it is Bitcoin, and it is Bitcoin returns, and we can calculate the risk of Bitcoin, and we can look at this time series of Bitcoin risk like this, and that is another risk. What's this risk assessment method, and that is the tail risk. So we analyze this risk using this time series model. And the reason why we are doing this kind of risk management is that, so what will happen tomorrow? So what is the risk level of tomorrow? So for the Bitcoin, so it looks good. In these days, it doesn't have some statistical risk in tomorrow. So Ethereum also very nice. And so S&P 500 is, so it may take some time to read the data. But anyway, so that is also good. But so in 2020, March 12, so Bitcoin market was a little some risky than in these days. So it was nightmare. So one day before that one, so it was not so risky, but so next day it was risky, and the big crisis was observed in that day. So this kind of thing is researched by analyzing the data. Okay, so that is what we are doing in these days in our research group. That's it. Thank you very much for your attention.
Yeah, thank you very much, Dr. Kim. So last word, again, please check out our Blockchain Lab website, Center of Entrepreneurial Finance, volunteer researcher, signed up, and also check out our Stony Finance, stonyfinlab.org. We have free newsletter and a YouTube channel. So we're gonna post this recording to the YouTube channel and send the link to you via email.